Good morning. You're watching The Market right here in 18 Hour with me, Aisha Faridi, Anisha Jain, Avan Dabash in the studios. And for our markets, yesterday was not bad at all. While on a net basis, you looked flat. We managed to scale up above that 18,300 print. But remember, it's a good 100-point recovery that you had from the session lows. So clearly, dip buyers are waiting out there with bated breath. Having said that, the data points this morning as well are not looking bad at all. Given the fact that US CPI, the much awaited inflation print has actually cooled off marginally though, but US markets, they managed to end largely higher from the session lows. Now, why is this data important? Because this really gives you the cue for what the Fed may actually do next. Is it going to be a pause? That is what the markets are anticipating, and that's pretty much what the dot plot in any case has indicated. The April CPI on a month-on-month basis, it's higher just by about 0.4%. On a year-on-year basis, of course, it's a near 5% uptick coming in. The core CPI numbers as well have come out, and that's something that the market was pricing in. Analysts are now saying about the Fed trajectory that traders are pricing in a pause at the next meeting, and they expect rate cuts starting as soon as July as well. So the data-dependent Fed has got its cue pretty much. But Anisha, the global market reaction as well is not all that bad. The SGX Nifty is indicating a mildly positive beginning.
Oh, well, yes, we did see S&P rising, Nasdaq rising, and there was a reaction of the CPI number on the Treasury yields as well, which cooled off substantially, and that's going to have an impact on the equity markets as well. That's why SGX Nifty is suggesting we are likely to see a positive start, and that's coming after the solid gains that we have seen in the last couple of weeks. Remember, 18,300 mark is something that we scaled and closed above that mark for the first time since December of last year. So an important mark being crossed yesterday. FIIs have been buying on a trot. In fact, 10th consecutive day they bought yesterday as well, and a solid figure coming in of almost 1,800 crores. Having said that, the only worry for the street is how the public sector banks have been doing, because the Nifty PSP index slipped below the 100-day moving average, and for the last 3 to 4 sessions we have been seeing that consistently that index or that particular sector has been on the back foot. Of course, the earnings have been largely in line or a bit subpar versus street expectation, and then there was this additional worry coming in with respect to the higher ECL provisioning that street might be factoring in. So that's the reason we saw that the PSP names were on the back foot, but the buying on dip strategy has been working out so far. Let's see where we go from here on, because a lot of earnings reaction too today to watch out for. Avan.
Absolutely. You had a slew of numbers that came out, L&T for instance, and it was an okay set of earnings. The margin compression was clearly reflected. There were additional costs that were undertaken in order to complete orders, so it was a pretty poor set of numbers. Ditto with heavyweight Dr. Reddy's, which came out with its quarterly earnings post-market hours. There were a lot of other mid-cap counters as well that came out with their numbers. GCPL, for instance, the volume led double-digit sales growth. There was robust margin expansion, so that was reflected in the quarter gone by. You also had something like Hindalco, largely on the back of Novelis's earnings, which were rather improved. In fact, JP Morgan has got an overweight rating on Hindalco with the target price at about 490, saying that the margin improvement was seen in most regions. An inline set for 8G Infra. You had something like a Sagar Cements as well that came out with its earnings, and that was a little bit mixed, with revenues up, but the EBITDA was down. So that's pretty much the overall earnings roundup. And speaking of earnings, today is going to be fairly critical because we've got a whole host of heavyweights that will be reporting their Q4 earnings. Asian Paints being a case in point, closely watching out for that volume growth, the competitive intensity. Eicher Motors and Siemens, as well as Balrampur Chini and Deepak Nitrite, all of that will closely be eyed by the street in terms of earnings today, Aisha.
Oh yeah, absolutely. And we've got a domestic queue as well. After a high-octane campaign, Karnataka is set for the mega battle of ballots, with the fate of over 2,500 candidates locked in EVMs as polling for 224 assembly seats comes to an end as of yesterday. Karnataka, by the way, reported around a 66% voter turnout in what is seen as a three-way contest between BJP, Congress as well as JDS. That is, the state polls are set to be a precursor to the general elections next year. The poll of polls is giving Congress an edge with around 113 seats, while BJP is languishing with around 84 seats. So what can we expect on May 13th when the verdict is going to be delivered? That's this Saturday, and what are the implications that it's going to have on the general elections next year? We spoke with a whole host of political experts. Here's what they had to say.
The exit polls, it is that the suspense continues. The exit polls do not clarify the pictures. It is what we had guessed all along, that Congress would be ahead, but will the BJP catch up? Will it be a hung assembly? And if it's a hung assembly, depending on the arithmetic, it's anybody's guess who will form the government. What if JDS insists on being the king?
It will be too simplistic to say that it will be a semi-final, and at the same time to completely deny its import will also be wrong. The fact is that the Indian voter, and I traveled in Karnataka for about a week, has really differentiated between state and national elections. And Modi as a prime ministerial candidate and Modi pumping in for some other leader as chief minister. So the voter has become savvy, especially in states like Karnataka, which are so prosperous, tech savvy, and also overall intelligence of the voter is the same across the country.
For the Congress to dream of coming back to power decisively, I think the numbers that the exit polls show are certainly not a consolation. Well, we have to wait till the 13th, and they will have to wait till the 13th.
Is it a win? Number one. More of the trend seems to suggest a respectable performance. Where did the Prime Minister go? There's no doubt that within the BJP itself, there was an experiment. There was a decision that the PM would prevail over the local leadership. And many of the influential local figures actually left. The Congress, conversely, even though each member of the Gandhi family campaigned, the campaign was focused on Siddharamaiah. It was focused on Mallikarjun Kharge in the Karnataka-Hyderabad region, where I suspect the party is going to do very well.
Okay, from national headlines, let's shift focus to the headlines coming in from across the world. Global commentary coming in from Peter Schiff. He's a marquee investor. And remember, he said that no one should be excited about the April CPI rising just 4.9% versus the expectation of 5% because the inflation is still well above the Fed target of around 2%. And it represents that inflation is going to be sticky going forward as well. In fact, they say that 4% rise in consumer prices is much hotter than 1% that we had seen in the prior month. So yes, a bit of a good news coming in, but throwing water as far as that good news is concerned by Peter Schiff. But ECB's Mario Centeno also says that the policy will remain tight for some more time. The interest rates should start coming down, but that will happen only in 2024. So that's the commentary coming in from Europe. And important, news flow coming in with respect to startups, wherein Ola is in focus because Vanguard has slashed the company's valuation by 35% to $4.8 billion. Remember, this is the third valuation markdown that Vanguard has done. It had already taken a 45% cut back in 2020. Then it was followed by a 9.5% cut in 2021. And this is now the third cut coming in. And Ola is not alone. We have seen other companies also see massive cuts. We had recently seen the news flow around Swiggy. There was Oyo as well, which had seen a cut. SoftBank had taken a cut, and then Byju's too was in focus on account of the valuation drawdowns. So a lot of these startups are feeling the heat as far as the freezing winter is concerned. But shifting focus to getting the fundamental commentary back home as well, Dinshaw Irani, the CIO at Helios India, is very positive on HDFC Bank and has been holding the stock since the inception of Helios India.
I think that's one of our favorites. I mean, we've been holding it for probably that's the only bank which we've been holding from the day we started our fund, which is Helios Fund in 2005 itself. And we've been adding to it whenever, and I sincerely believe that this is the one which is going to lead the rally going forward for the banking sector per se. And then, frankly, it's just there'll be a bit of hiccups in between because recently that MSCI came up with the new rule that they're going to apply a factor of 0.5 to it rather than 1 going forward, and so that's why there's some correction with it. But that's one sector that we very gung-ho on. Another sector that we've been fairly comfortable with has been in the consumer space, which is mainly the discretionary consumer space. And again, we're talking about here, which is aspirational discretionary as such. And here again, we did see valuations bloat up a lot at the beginning of the year. Everybody was fairly gung-ho, and we did chop off or pair off a bit of a position. In the sense, we reduced our weights in these stocks because we saw the Ps really bloating up and not getting justified on future growth. And as soon as the stocks came off, we've been adding to those names also. I think going forward, that's another one which is going to be leading the pack. Apart from that, I don't think we added any new names as such.
And Tata Elxsi, that has a large addressable market, according to Saurabh Mukherjee of Marcellus Investment Managers. Here are why he continues to like Tata Elxsi.
In the design of automobiles, in the design of, say, OTT platforms as front end, in the design of many of the features we see in mobile phones, Tata Elxsi is increasingly emerged as a global leader. And as car design, as auto design moves away from the Purana mode, which was once in 10 years, a Toyota gets a refresh or a Honda gets a refresh, as we move away from that into a car design refresh cycle, which is more like what Apple does with its phones, the addressable market for Tata Elxsi, we reckon, has expanded significantly. So it's a dominant player, it's the largest in India in engineering and industrial design. Firms like LTTS and Tata Elxsi, which are in our portfolio, they're more in engineering and industrial design services. This is slightly different from IT services. In IT services, TCS remains our mainstay. In some of our advisory portfolios, we have Infosys. And I think, as I've said over the last couple of years, I remain astonished that people in our country, investors in our country, buy and sell firms like TCS and Infosys on the IT cycle, because to my mind, it's a one-way story. In the case of a firm like TCS, as you can imagine, there isn't that much incremental capex required. In fact, there's negligible incremental capex required. This is not Tata Steel or an industrial giant, and therefore the entire PAT that you generate ends up becoming cash flow to shareholders, even in weak years such as possibly the year ahead. Even in weak years, you're getting 11-12% free cash flow compounding. In good years, you're getting free cash flow compounding pushing 20%.
All right, let's connect with our charters then to find out what their outlook is on the markets as well as their top stock recommendations. Kunal Bothra as well as Naresh Mirani joining in as always. And Kunal, let's get in a sense from you first up. The SGX Nifty indicating at a pretty muted start this morning at 18,300. Can we scale up further?
Good morning, Avan. I think it was an encouraging day for the markets yesterday. Recovery of 100 points on the Nifty after, I think, it coming very close to that 18,200 mark, and a recovery of more than 300 odd points for the Bank Nifty. More importantly, many large cap names managed to participate back again after yesterday's intraday move. We saw many sectors making a comeback. The PSU stocks specifically making a comeback for themselves. Banking stocks, and especially those key private sector banking names like HDFC Bank, etc., which closed at the high point of the day itself yesterday. There was a mild increase in the open interest for both the indices on the Nifty and Bank Nifty. But I think the most important highlight, which I think I would probably keep a watch on, would be that 18,300 call option. So in the last 3-4 days, when the Nifty is trying to consolidate and take resistance at this 18,300 mark, say on closing basis, yesterday at the fag end, in the last half an hour or so, there was a good amount of short covering which happened at the 18,300 call option strike. So we need to see the first half an hour, first 1 hour today, because it's the expiry, the weekly expiry week. If we sustain about 18,350, 360 levels on the spot basis, I believe that there could be a further amount of short covering which could probably catapult the Nifty on an intraday basis.
Naresh, hi. 100-point recovery coming in from the session lows yesterday. What are we in store for today?
So the trend continues to remain positive. It continues to surprise us on the upside by very strong recoveries intraday. So out here, the case is the same. Once we crossed 17,800, it was about 18,200. Now we've sustained about 18,200. That gives us a target price of 18,600 to 18,800, which is closer to the all-time highs. So the view is we keep taking such steps, a little bit of a pause around the resistance levels, and then keep going up. Until the time we don't see a reason for the trend, say a trend change reason, continue to ride on to the positive momentum. The Bank Nifty needs a little more consolidation before it can take out 44,000. So it's essentially that Bank Nifty is much closer to the all-time highs. Nifty is a little away. So there is a distance to be made by Nifty. So overall positive on Nifty, waiting for some bit of more consolidation on Bank Nifty to participate. Overall, the broader markets could continue to do better because the mid cap and the small cap indices are coming back to one-year highs. So stock-specific action should continue to be as strong as it has been.
Okay, so that's the take coming in as far as the index level trades are concerned. But what about the stock-specific recommendations, Kunal?
So I'll go with a couple of buy calls. DV Slab is the first stock which I would suggest as a buy. I think pharma stocks have been doing reasonably well. DV Slab has managed to break past about the 200 DMA. So targets remain at 35.50. Stop loss could be kept at 33.50 mark. And the second one is about Tata Communication. Day before yesterday, the stock showed a very strong candlestick up move, managed to break past about major resistance. Volumes, etc., were exceedingly encouraging for Tata Communication. Yesterday, the stock was down 1 to 2%. So I believe it was a good time to initiate a buy for Tata Communication, more of a buy on dips. Targets of 13.30, stop loss 12.50.
What about you, Naresh? What are you spotting?
So first is a buy on IndusInd Bank. The stock has finally started taking strength, relative strength breakout as well. Finally breaks that 1150, 1160 mark. Expecting a shorter term move quickly to 1250. And once we cross 1250, that is where the long-term trend changes. 1250 was the high pre-COVID. So for now, it's a start with a target price of 1250 and a stop loss at 1150. Second is a buy on Coal India. The stock is in touching distance of that all-time high on a dividend-adjusted basis. 238 to 240 is a resistance, knocking around it for the last two sessions. Post the results, the gap down, the stock has now been getting closer to the resistance, expecting it to break out about the 240 mark and a quick dash towards 255. A stop loss to be kept at 230.
Right, okay, on that note, we're going to take a very quick break. By the way, the SGX Nifty, even though it's indicating a quiet start in the positive, but the headline number is now at 18,391. So pretty much 18,400, at least on the futures inside. We'll take a break. When we come back, we'll chat with our fundamental experts, get you a lot of management interviews in just a bit.
Welcome back. Well, a whole host of earnings to deal with, so let's try and understand how those stocks will be reacting, starting with L&T itself. It was a good show when it comes to the order inflow, and that's why we have seen upgrades come by from Citi, from Nomura, etc. But it was a miss on the margin front, and that might weigh on the stock today. Let's try and understand the other internals as Sesha is joining us with all of that.
Well, yes, L&T numbers this time around are a tad bit below what the street was working with. Revenues have come in at 58,335 crores, which is an uptick of about 10% on a year-on-year basis, but below what the street was working with. Margins, meanwhile, have contracted this time on a year-on-year basis. They've come in at 11.7% versus 12.3% that the company reported same time last year. As far as order inflow is concerned, that looks pretty strong. We were expecting order inflows to stand at about 70,000 crores, and it has come in at 76,100 crores, and international orders constitute about 47% of the total order inflows this time. As far as outlook is concerned, management says that they are cautiously optimistic on their large project wins and timely execution of their large order book. As far as, remember, there's a change in chairmanship as well that has come in for L&T this time. Mr. A.M. Naik has stepped down as the non-executive chairman of the company, and Mr. S.N. Subramaniam, who's currently the chief executive officer and managing director, has been re-designated as the chairman and managing director of the company with effect from the 1st of October 2023. Meanwhile, company has also given guidance for FY24, where they say that revenue growth could be anywhere between 12 to 15% for FY24 versus FY23. As far as margins are concerned, they say that margins could stand anywhere between 8.5 to 9% for FY24. They say order inflows could see an uptick of about 10 to 12% in FY24. All in all, for this quarter, numbers are weak. They were below what the street was working with, but for FY24, they've given strong commentary.
The company has closed FY23 with 3.99 trillion rupees worth of orders, which is 12% higher than the 3.57 trillion of the previous year. Nearly 28% of this 3.99 trillion rupees is from international orders. And Saudi Arabia, as I mentioned earlier, is the largest overseas contributor for our orders. In all, of the 3.99 trillion rupees of order book, 71% is from infrastructure sector and about 18% is from energy sector.
Okay, one more set of earnings which the market is going to be reacting to, and that's Dr. Reddy's. The India business growth continues to remain volatile for them, and the US pricing pressure is something which one has witnessed in this quarter. A lot of questions then for the CEO, so let me welcome him on board. Erez Israeli from Dr. Reddy's joins in on the show right now. Erez, how is it that you're experiencing the pricing pressure in the US markets? Any signs of stability? Also, what is the outlook then on growth for the full fiscal?
So the pricing is as a results of the mix of the portfolio looks favorable this quarter. Having said that, the numbers, the market is the same. So it's the same type of business model, the same type of customers, and likely when there is a competition for products that we have, we will see price erosion, and that's the same comes when we are launching a product for other people. So that's likely to stay. But let's say for us, as a result of the current portfolio, current situation about the products, it looks better this time. We are going to continue to grow in all the markets, including the United States. We are in the double-digit mode through the year with more than 25% of ROC as well as EBITDA. Actually, we finished the year with 30% of EBITDA and 35% of ROC. And we see nice momentum, and likely that also in FY24, we will continue to see momentum in our growth.
Right. Could you tell us what was the share of generic Revlimid in the quarter gone by, and going forward, can we expect higher volumes?
I believe that you already see the contribution of the product, and likely that these products will continue to be meaningful for us. May fluctuate from quarter to quarter as it's related to the type of orders that people are placing. But we are absolutely see that as a good and important product for us also in the next coming quarters.
Well, let me talk about the India business now, because that's also been very volatile of late. Could you talk to us about how FY24 is likely to shape up for India business specifically?
What leads the growth in India for us is the focus on meaningful brands. We have certain therapeutic areas, certain brands that we are focusing on, going for all the tier cities in India. And in addition to that, we are very busy with launches of new products and with licensing in and BD activities that will bring more products to India for both what we call the Horizon 1, which is the classic pharmaceuticals, as well as Horizon 2, which is involved areas like digital, like gene therapy, like cell therapy, like nutraceuticals. So we see India as a very important market for us, a leading market for us, and we are planning to grow double digit, not just in next 12 months, but also in the next coming years.
And finally, your margins have dropped sequentially. Down the line, do you think we can expect a bounce back? Do you think you can achieve those 30% levels?
So margins are primarily function sometimes on one-offs and tax rate that was a bit higher due to all kinds of one-time events. But in general, our margins are very strong. EBITDA of 30%, ROC of 35%. What we are guiding that we are always aiming for the 25% EBITDA and 25% ROC, as we want actually to take the product and invest into the future. So likely our business is very profitable. Being an organic company, a company that is launching its own products primarily, we like actually to increase our investments while allowing that margins to continue. So that's, of course, will boost the growth in the short term as well as in the long term.
Mr. Israeli, thank you so much for taking time out and giving us a clearer picture there on the quarterly numbers. That's the management saying that as of now, they are seeing momentum for new launches in the US. They will continue investing in organic growth and are aiming for a 25% EBITDA margin going ahead. All right, lots of other numbers, so let's keep you up to speed with everything. We've got GCPL or Godrej Consumer Products. The company came out with its numbers, revenues and net income in line with street expectations. Margins beat the street. Let's find out what exactly the company delivered. Vinny is here to break it down for us. And also, Vinny, tell us, what do the brokerages have to say?
So absolutely, in terms of numbers, when you look at it for GCPL, Q4 was a strong quarter across metrics when you look at it in terms of the domestic business as well as the international business, which has also started seeing a recovery coming in. Volume growth is what I want to highlight first, because volume growth is coming at 11%. After 7 quarters that we're seeing that the volume growth has come back to that double-digit volume growth, and it is the highest among the other FMCG peers that when we are comparing. So India volume growth for the company has come in at 11%. Overall, when you look at the revenue growth also, that was a double-digit growth as well. So we've seen a broad-based growth, whether in terms of revenue-led as well as volume-led growth as well. Other than that, in terms of the margins of the company, we're seeing an expansion of 400 basis points. Obviously, the main reason for this is that, inflationary pressure is reducing. Palm oil prices have seen a sharp correction coming in, and that is why the margins have seen an expansion. EBITDA margins have come in at 20% versus just 16% last year. Talking a bit more in the segment-wise, household insecticide segment or the HI segment that comes in the home care business and home care segment of that has seen an upward trajectory as well. Personal wash segment has also seen a double-digit growth led by healthy volume growth, and the company also highlighted that they have continued to gain market share in this segment as well. Other than that, international business, GAUM, obviously we're seeing an 8% growth in terms of CC terms. Impact on this is mainly only because of the demonetization in Nigeria as well as the elections that were taking place in Nigeria. And in Indonesia also, we are seeing the sales growth of 5%. Recovery is what we're seeing coming in for the Indonesia business as well. So all in all, yes, a positive outlook that is coming from the management as well. Brokerages are also maintaining an overweight rating, whether you look at it at Morgan Stanley, overweight rating, target price of 1,129 rupees, while JP Morgan too is maintaining an overweight rating and given a target price of 990 rupees per share.
Vinny, thank you so much for that. So a thumbs up coming in for Godrej Consumers today, and a big thumbs up coming in for Gujarat Gas as well, because it's managed to beat the street estimates by anywhere between 5 to 10%. Solid volume growth. The dividend announcement was also quite strong, and all of this is likely to mean that the stock is going to be in the green today. But let's try and understand the other internals. Somit is joining us with all of that.
Well, Gujarat Gas reported a strong set of numbers in the fourth quarter of FY23. If you see the company's EBITDA and net profit, they have beaten the street estimates by around 5 to 10%. However, do remember the beat is lower than what MGL had done of around 10 to 20%. However, the volume growth is the key number for Gujarat Gas, and that has come in ahead of the street estimates. The volume have grown nearly 22% on a sequential basis, and this is because the company had lowered the gas prices for industries, and that's how they gathered most of these volumes in the fourth quarter of FY23. Now, our beat on EBITDA and net profit was largely on account of lower gas costs, which declined nearly 8% on a sequential basis because the procurement cost of long-term LNG and spot LNG declined significantly for the company in the fourth quarter of FY23. And the bigger announcement that has come in from the company is the fact that the company has announced its highest ever dividend since listing of around 6.65 rupees, which translates into a dividend yield of around 1.4% as against its 5-year average of just 0.3%. Now, in its analyst meet, the company also said that the total volumes have currently improved to around 9.5 MMSCMD as compared to 8.9 that we had seen in the fourth quarter, and the management is targeting that the FY24 exit rate of volume would further increase to around 11 MMSCMD, which is a strong commentary coming in from the management. And the management also said that the industrial PNG volumes are currently stable and the prices are lower than what the propane or the LPG prices are, which is the competition for Gujarat Gas. And they have refrained from giving any margin guidance as they're saying that their focus for FY24 would remain on volumes. And they also said that going ahead, the dividend payout policy would be nearly 30% of the profits going forward, which is also a positive commentary coming in from Gujarat Gas management.
All right, thanks very much, Somit, for giving us those details. Let's connect then with Pankaj Pandey, who is joining in from ICICIdirect.com. Hi, Pankaj. Morning. Lots to chat about. Why don't we start off with L&T, and just going by the kind of performance that they've delivered, it still seems that brokerages remain gung-ho. Citi says that it's the top pick, and you've got a lot of brokerages who are increasing the EPS estimates, saying that as of now, it has been a beat on the order guidance after the last 7 years. What's been your key takeaway?
Hi, good morning. Thanks for having me. See, from a number perspective, numbers were a bit softer, both on the top line as well as on the margin front. But I think L&T remains one of the best places to play the capex cycle. They have guided for 15% kind of order book growth, along with similar top line and bottom line numbers. I think one good thing is that the working capital as a percentage of sales is sort of coming down. So that's a sort of a positive. And while the numbers are sort of a mess, but I think the kind of capex push what the government has been doing, I think L&T remains one of the best picks to sort of play out. The other thing is that IT as a business also sort of contributes significantly, while IT companies or IT business for them hasn't really sort of done so well. But our sense is that with US inflation sort of turning a bit softer than expected, the IT companies also sort of would witness recover. So some of the parts basis, L&T is also attractive from that perspective also, because IT is one of the sectors which has been sort of quite ignored, has taken a decent amount of price at time correction.
Hi, Pankaj. This is Anisha joining in the conversation as well. Hi, Pankaj. I wanted to just shift focus and talk about the pharma sector, because Dr. Reddy's number were a bit of a miss as well. How do you think it compares with the likes of Lupin? And if you have a view on the Sanofi demerger as well?
So when you sort of look at DRL, US revenues were a beat compared to our estimates. Even last quarter, revenue growth for US was quite good. I think India business is yet to sort of pick up, but while Europe is sort of also done well. But our sense is that the company has been focusing more on domestic business, which is contributing about high single-digit kind of a contribution to top line. And going forward with the perspective that domestic business will contribute more, and which is a relatively less volatile business, our sense is that Dr. Reddy going forward should ideally do well. We had a previously buy rating. I think we'll again sort of review the numbers, and largely our sense is that things remain intact in terms of what our thought process is. So we'll continue to maintain a positive stance on that company. I think on Sanofi, the challenge with Sanofi is that their growth numbers are quite muted. I mean, 3-4% kind of a growth is quite muted, and even the demerger also may not really do much, because when you look at some of their top brands, so those are still sort of giving a flattish or a negative kind of a growth. So, so from that perspective, unless the growth does not revive, I think demerger may not really help much. We had a previously hold rating on the stock. I don't think, given the numbers, we would need to sort of change the stance there.
Okay, so continuing with the hold stance on Sanofi and like Dr. Reddy's at this point of time, Naresh, your view on the pharma stocks?
So the only one which was actually coming out of in a strong trend was Dr. Reddy's, and today's price reaction would again take it back to the place from where it started off with. So technically 4600, 4650 is a strong support zone, which is where it should hold on. So overall, the pharma pack, I would go with trades which are oversold and reversing, which is where it comes out to Biocon, which came down all the way to March 20 prices. There is a Alembic Pharma, which went back to March 20 prices. There is a Laurus Labs, which has corrected 50-60% from the top and is showing signs of reversal. So we are seeing clear signs of momentum and change in trend in the names which have fallen the most. We've seen recently a Glenmark Pharma go up in a strong way. Aurobindo Pharma go up in a strong way. I would expect a similar move in something like a Biocon, Alembic Pharma, Natco Pharma, Laurus Labs. So these are the names which have corrected 40, 50, 60% from the top, made a strong base out here. So the risk reward is well placed in names which have fallen a lot for a bounce back trade. The momentum ones are not really holding on to the momentum. Sun Pharma has been just holding on to the prices, not taking a momentum upside take. So looking at a basket of these small names, one could see a stronger bounce back in the names which have fallen a lot.
That's the view coming in on pharma, but let's move on then to hear out some top fundamental stock ideas. Well, let's hear out first up what Dipan Mehta is placing his bets on.
I think Cummins is in a very interesting space. We have been very positive on the entire engineering capital goods space, and Cummins, I think, is one of the leading engineering companies. I think it's gensets and diesel engines. Diesel gensets are absolutely world class, and of course, they have the advantage of exporting to other Cummins subsidiaries as well on a transfer pricing basis. Valuations are reasonable compared to historically what the stock has traded at. And I think after many quarters of sideways to slightly disappointing performance, last two quarters, at least last quarter and this quarter, may be quite impressive. A lot of the cost increases, I think, have been passed on, and now we are seeing subdued raw material trends, and that should benefit the margin management for the company. And the way we are seeing infrastructure projects take off, I think there's going to be good demand for the company's products as well. So very positive on Cummins per se. And it's a premium player, MNC company, and always has traded at a very high price to earnings multiple. So let's not get too impacted by that. But on the whole, I think next few quarters look very interesting and very positive for Cummins.
Okay, in terms of stocks to look out for today, well, Hindalco is going to be in focus. Its wholly owned subsidiary Novelis came out with its Q4 numbers, which are largely in line with what the market was anticipating. In fact, they saw a sequential improvement in the numbers on the back of price hikes as well that they undertook. Ashesha is here with more details on Novelis' performance. Ashesha?
Well, yes, Novelis, which is Hindalco's wholly owned subsidiary, has reported largely in-line set of numbers. On a sequential basis, we have seen growth because of price hikes that the company had undertaken in the quarter gone by. As far as numbers are concerned, net sales has seen an uptick of about 5% on a sequential basis. Shipments, meanwhile, has seen an uptick of about 3% QOQ, and this is lower than what the street was working with. And this is because beverage can shipments were impacted due to inventory reduction that was done by customers. In fact, as far as inventory destocking is concerned, management has given some guidance where they say that they expect peak can restocking by the first quarter of FY24. They also say that second quarter may be impacted due to lower demand from building and construction segment. Third quarter is in any case a weak quarter, and hence management expects full recovery only by fourth quarter of FY24. As far as other internals are concerned, adjusted EBITDA per ton for the quarter gone by saw an uptick of about 18% on a quarter-on-quarter basis, and management says that in the first half of FY24, EBITDA per ton could stand anywhere between $400 to $450 per ton. And in the fourth quarter of FY24, EBITDA per ton could finally stand at $500 per ton. This is the guidance that the management had given earlier. As far as debt position is concerned, debt has come down drastically in the quarter gone by, but given the aggressive capex plans that the company has, management has said that debt position of the company could increase by the end of FY24. All in all, for this quarter, numbers were in line with what the street was working with, but FY24 guidance is a little muted, and they say that they expect full recovery only by the fourth quarter of FY24.
Okay, so that's what we expect for Hindalco as the impact coming in for Novelis' earnings as well. But Pankaj, wanted your take regarding the cement pack as well. Of course, today Sagar Cements will be reacting to a muted set of numbers. But then you also had earlier numbers come by for Birla Corporation, which were okay. Nuvoco Vista saw a sales volume growth of almost 16% on a sequential basis. But the operating cost for all of them is still higher than what the street was expecting.
Correct. So when you sort of look at Sagar Cement numbers, so we were expecting about 300 to 400 rupees per ton, kind of a lower cost, but the cost has remained almost same. And that has sort of led to muted sort of numbers. Volume growth was largely higher because they've commissioned a new capacity. But when you look at cement companies, what we have liked is the tier one players, especially Ultratech, Ambuja, and ACC. All of them have delivered good amount of capacity utilization. In fact, ACC, Ambuja, and Ultratech have been operating at 100% capacity utilization. Volume growth has been sort of double digit, and there has been a bit of a margin expansion because of the lower power and fuel cost. Our sense is that Q1 onward, you will see the benefit of lower coking coal prices also sort of helping. And since volume growth is good, companies have not been sort of resorting to price hike, except for, I think, some bit of a price hike being taken in South. So we like the tier one players because they are growing far more higher than the industry. So from that perspective, at this point in time, we feel that the tier one players are a lot better placed compared to tier two names because they are still struggling with lower capacity utilization. Sagar, for example, is still sort of operating at about 65% kind of a capacity utilization, which is lower than what you see for the other tier one names.
Right. That's the take coming in right now on what earnings have been like. Just a couple of other buzzers in trade. And IndusInd Bank, especially after Friday's price performance, on a consecutive basis, you've seen a very good, recovery coming in on IndusInd Bank. Yesterday was no exception. Yesterday, too, the stock held out by about 3%. Kunal, which is looking like the strongest private banking chart right now?
There are a couple of names. Axis Bank is looking strong. IndusInd Bank is looking very strong. I think that stock is also nearing a breakout of the 1200 mark, and that's been a huge resistance for IndusInd Bank. HDFC Bank somehow after that Friday's move has lost its mojo back. So I'm not sure how much time would the stock take to cover the gap and then come back to that 1600 plus 1700 plus mark for itself. ICICI Bank is also one of the strongest names. In fact, that stock has been looking very consistent in terms of the price action. 930, 940. The last I had seen for the stock price, and I think I would probably sense that this could be the first large cap name which could probably hit back to that 4-digit mark or cross that 4-digit mark pretty soon. So there's a lot of consistency for ICICI Bank, but in terms of momentum, in terms of breakout, maybe Axis Bank as well as IndusInd Bank stand a better chance.
All right, let's move right on then and get in a view from you, Naresh, as to what the outlook is on some of the stocks that saw quite a breakdown in yesterday's trading session. UPL on the charts, and what's the view on Godrej Agrovet?
So UPL has been a stock which has gone nowhere for the last almost 2 years. The stock broke out about 650, 700 levels. Every time it goes to 800, 850, faces a resistance, comes back to 650 levels and faces a lot of support. So out here, it's a short-term breakdown below the 690, 700 mark, but the problem on the short side is the bottom in October was at 660. The bottom in March to July of this year was around 630. So the risk reward is not great shorting right now because that's a 5-8% downside. And overall, it spent 2 years in this sideways zone. So out here, one could actually be looking at a bottom fishing zone around 630, 650 levels if it comes, which is where I would expect it to make a major bottom going forward possibly. But in the near term, shorter term downside is continued towards 630, 650. Godrej Agrovet is another stock which has continued in a downtrend for the last almost 1 year. Yesterday's break is just another day for the stock. The drift continues to be lower, but till the time it doesn't reverses back above 450, not really interested in it.
Pankaj, just want to draw your attention to what's happening in FMCG and, especially on the back of Godrej Consumers numbers which came by yesterday, wherein while the Q4 operational numbers were in line with what the market was anticipating, but there's been a good 400 basis point margin expansion that they've seen on a year-on-year basis. Just drawing down from what the FMCG reportage has been so far, it seems like it's a very a rural specific story, very Dabur case to case kind of story, wherein Dabur has been the only rank underperformer and the rest of them have actually seen margin expansion across the board pretty much.
Well, yes. So when you sort of look at FMCG companies, so HUL did quite well with 13% kind of a growth. Dabur sort of again facing some of the challenges. But our sense is that, see, when you look at most of the FMCG companies earlier or last 2 years, the growth was largely driven by pricing. And now with a lot of commodities sort of correcting, you will see gross margin expansion and top line largely driven will be driven largely by volumes. The challenge is that when we sort of look at from a portfolio perspective, most of these stocks are still quite expensive, 55 or 50 to 60 kind of a forward multiple. And that is where we feel valuations are on a higher side. We will prefer more of something like, say, Tata Consumer, because that's trading at about 40 times. The ready-to-eat or ready-to-cook segment has witnessed good growth. So that is one stock which we like from a portfolio perspective within the entire FMCG as an overall space.
Pankaj, any view on Adani Group of stocks? Adani Enterprises is looking at fundraise on May 13. Ahead of that, you also have the Supreme Court ruling on May 12th. How should one approach the Adani Group of stocks?
So we have only a few stocks under coverage. So besides ACC and Ambuja, which we like both of them, because one, our sense is that there is a clear mandate to sort of grow the capacity to from say 67 odd million tons to 130 odd million tons. So clearly double-digit kind of a growth. The margin trajectory is expected, or a better per ton trajectory is expected to improve from 800 rupees per ton to 1200 rupees per ton. Besides that, we like Adani Port. Last 1 year has been a bit softer, but our sense is that in the second half, you will see recovery in volumes. And I think there has been some recalibration in terms of capex. So that is another stock which we like. I think beyond that, we really do not have a view on a number of companies. We used to track Adani Total Gas, but somewhere down the line, while the volume growth has been good, but the valuations are still quite rich for us to sort of say something materially from a fundamental perspective.
Okay, meantime, just wanted to also get in a view then on the charts and Kunal, revisit some of those railway candidates. You know, we've been discussing how a lot of them have come off quite significantly off late. Do you believe that, there is some more downside in store?
Yeah, there could be some more short-term downside, but I would still believe that these are good classical buy on dips candidate, for the likes of RVNL, IRCTC, IRCON, etc., IRFC, because many of these railway stocks, they've actually gone into a strong price volume breakout. Now, of course, the speed of the rally for most of these names, like for example, RVNL, which rallied up, I think, 75 or 80% plus in a matter of just about few weeks. So when you see such kind of a heightened price action, you're bound to see some short-term jerks as well as the corrections into the prices. But if these stocks come back to their key moving averages, say for example 50 DMAs or respective 20-day moving averages, those actually become as good points where these stocks tend to take support as well as go into a bounce back. So it's a matter of change of trend for most of these railway names. I would be bullish on the likes of RVNL, IRCON as well as IRCTC from a medium-term play. And with the kind of up move these stocks have shown over the last 1 month, there is a decisive change of trend. It's about positioning as well as buying these stocks at an apt level, which I believe could be closer to their respective moving averages. So as I said, maybe 20 DMA, 50 DMA, depending on how the stocks have run up, could be a good place to try and initiate a buy into these names.
Okay. Remains a buy on dip strategy. That's the word coming in on some of those railway stocks. Pankaj, meantime, let's get in your take as to what it is that you're handpicking when it comes to the auto space after having looked at the earnings.
So when you look at auto space, typically what we like is more of the CV plus the PV combination. So we like Tata Motors, we like Maruti, and also Ashok Leyland, because our sense is that one on the passenger vehicle side, while when you look at Maruti's margin have come in double digit. I mean, that used to be about 5% or even lower than a few quarters back. So with raw material prices softening, so that is another benefit what we're looking at. Along with that, the introduction of new models and the kind of capex. So that is one stock which looks attractive to us. And I think Tata Motors and Ashok Leyland largely because while April month numbers were softer, but our sense is that next 2 years CV as a cycle should sort of do well. given the sort of capex what we are sort of seeing. So from that perspective, both the companies look good to us. What we sort of really do not are not chasing at this point in time is the two-wheeler space. I think at best you'll get 6 to 7 or 6 to 8% kind of a growth, which is not really sort of great enough for a growth, even with some bit of a margin expansion, because while some of the names like say Hero MotoCorp are trading at 12, 13 times, so valuation looks attractive. But I think somewhere down the line, we are still sort of holding ourselves largely because the growth is still sort of muted.
And that was quite visible in the numbers of Bosch also overnight. While the top line growth was ahead of what Street was expecting, there was an operational miss because the operating margins came in below expectation, and that's why the profitability was lower, almost by 8 to 10% versus Street estimate. However, going forward, they're talking about a 15% growth in total revenue in FY24, and they see that continue to see an increase in content per vehicle as well. So overall, moderate growth is what they're expecting, and good acquisition as well as strong order book is likely to play out for the next 3 to 5 years as far as Bosch is concerned as well. Kunal, your take as far as some of these auto stocks are concerned, what would be your top pick within the entire space?
Well, from the auto ang space, it would be Samvardhana Motherson. In fact, that stock has managed to show very good strength. In fact, it's been a very consistent up move for Samvardhana Motherson. I remember tracking the stock as well as recommending it when it was almost 62, 64 rupees. I think a month and a half out back. The stock had not been able to break past about the 200-day moving averages. There was just some interesting signs in terms of volumes changing. The indicators start to shape up quite well. And now from those 60 to 64 levels, the stock is on the verge of testing the 80 mark. I think 77 or 78 is where the stock managed to break past yesterday. It's confirmed a breakout of the 200 moving average as well. So this could be a very interesting stock from the entire auto ang space. Yes, the tire stocks, Apollo Tires, JK Tires, they have done exceptionally well. But I think there are new candidates like Samvardhana Motherson, which is also looking quite interesting. Bosch, on the other hand, has this odd tendency. So I've been tracking the stock over the last couple of months on the short-term time basis. But I think closer to 19,700, 800, the stock tends to find some resistance. It corrects back towards the sub 19,000 mark, and then somehow the stock gets into a recovery phase. So my sense is it's stuck into the 1,000-1,500 point band. So we wait out for a breakout about 20k mark for Bosch to try and get into a buy zone.
That's quite interesting. Samvardhana, Motherson as well as Bosch are the two stocks that Kunal actually highlighted. Pankaj, what do you think is more lucrative right now, autos or auto angs? I know you just highlighted your opinion on autos, but just if you had to make a choice.
So when you sort of look at some of the auto ancillary players, what we like is most of the tire companies, because one, I think when you look at both rubber plus the crude-based derivatives, I mean so that cost component is 65 to 70%, and both of them are looking soft to us. We've seen good amount of 400 to 500 bips kind of a margin expansion for most of the players, and typically tire has got a higher tonnage or a contribution from CVs slightly higher. So we like Apollo Tires, we like JK Tires. So we like that entire space. Besides that, some of the other names which we like is something like, say, for example, Mayur Unicotas. Company is guiding for good set of numbers for the next 2 years. They derive about 65% of their top line from the artificial or technical textile, what they sell it to autos. So that is another what we like. Bosch is also sort of looking good to us because see the margins for Bosch has sort of normalized to 12-13 odd percent. So pre-COVID levels margins have been achieved. I think dividend payout has been pretty good at 10 odd 100 odd percent. And on top of it, I think we feel that it's a beneficiary of stringent emission control norms, and they've got good capabilities on the new age alternate fuels, including EVs. So we feel that this is a good ancillary to sort of look at from a portfolio perspective.
Pankaj, I also wanted your take regarding Zomato, because our colleague Ankur actually picked up something from sources talking about how ONDC is likely to cap the discount, so that heavy discounting that we are seeing and the threat coming in from competition might be a bit lower than what earlier expected. Your view on Zomato, and then we can bring on Ankur as well to talk to us about that.
So most of the new age companies we don't track largely because of valuation. Zomato also we don't have a view, so won't be able to comment.
So don't have a view as far as fundamentals of Zomato is concerned. But Nuresh, what about the technical aspect of it? Zomato as well as other new age tech companies?
So in the new age companies, what we've started seeing is a a classical basing out formation, and this is happening across the world as well. If you look at Nasdaq, it has outperformed over the last the calendar year after falling a lot. A lot of those companies have also recovered sharply. Globally, that has been the case. Meta has gone up from 100 to 240. Same thing is happening in India. Zomato, if you look at it, the stock was making a bottom at 40-50 in the May to July of 2022. Came back to 50 levels in March, April. So almost a year spent around this area. And now started making a recovery. A short-term breakout was done at 55, 57. The highs for this period are closer to 75. That is where a bigger breakout plays out here. So a bottoming out case has been done for Zomato, and slowly and steadily it would go towards 75 and then maybe higher also. So positive on the whole new age segment of three stocks as of now. It is Zomato, Paytm, and PB Fintech. Very similar formations, 6 to 12 months of consolidation, and now slowly trending up one by one.
Okay, in fact, talking about the new age tech world, we are talking about how some of these startups have seen big cuts coming in their valuation as well. And for the leading cap aggregator Ola as well, the US investment firm Vanguard has gone ahead and slashed Ola valuations by 35% to $4.8 billion from an earlier $7.4 billion. Remember, this comes after a series of valuation markdowns gripping the startup ecosystem in the country. This is the third valuation markdown for Ola itself. The same group had cut the value of its investment in the ride-hailing firm by 45% in the first half of 2020, and that was followed by almost a 10% cut coming in 2021. So this is the third cut that we are seeing as far as Ola is concerned, and of course other companies like Swiggy, Byju's, etc. have also seen sharp markdowns. But Zomato, as we were talking about, has already seen, given the fact the price discovery happens on an everyday basis, so maybe not a like-to-like comparison as far as that is concerned.
Oh yeah, absolutely. In the meantime, bunch of other stocks which have managed to hold out well. We've already flagged up what's happening within the auto pack, and Motherson Sumi was yesterday as well a big mover. 3% higher is where it shut shop. But the gas names also continue to hold a buzz, and MGL as well was a winner in trade yesterday. A 3% move on the futures, continue to look good. I think day before you had a one down day, if I'm not mistaken, Kunal.
Yeah, day before was a down day for MGL.
But in good stead, you think? MGL, IGL both?
No, so if you remember, I think 2 days back when that stock had given a 5% up move, I mentioned that these stocks have an odd tendency of giving a breakout, but then the breakout doesn't doesn't see a major follow through or immediate follow through. These stocks, they correct, consolidate for a couple of weeks, and then they get ready for another round of breakout. So it's always better to buy these stocks on correction. So like what we saw 2 days back, a strong up move, a gap being formed for IGL, MGL, but then I think yesterday and day before, these stocks saw an intraday correction. Specifically, day before yesterday, there was a decent correction for these stocks. So I think buying these stocks on correction is a good strategy. The chart patterns on a medium-term basis are very attractive. So you should not be in a hurry to try and buy these stocks on momentum, but wait out for a decent correction, a 5%, 8% correction from the previous swing high is a very good level to enter these names.
So that's a take coming in. Pankaj, I also wanted your take about IT and Infosys specifically, because today as well there's a note coming in from JP Morgan who says that they're cutting the target price further because they're expecting there's going to be disappointment in Q1, and after Q1 they're expecting another downgrade to come as far as guidance is concerned.
So on Infosys, when you sort of look at, it's already down 15% compared to their long-term P multiples. So our sense is that while near-term things are still challenging because we still don't have much of a clarity in terms of how the banking crisis could sort of emerge or the US GDP growth rate and tech spends. But our sense is historically has been is that Infosys usually tends to sort of revise their guidance as things sort of improves. Probably that could take a few quarters. So till that time, we don't expect much of a price performance. But from a valuation perspective, like I said, it's quite attractive value below 15% of their long-term PE multiples. So price-wise good, but near-term performance could still take or may not happen. And medium-term, probably yes, we would be bullish on Infosys.
Okay, there you have it. Let's hear it out then and find out some top fundamental stock ideas as well. Deven Choksi says that he is bullish on HFCL and Sterlite Tech. Listen in.
The results, I think, which came up for HFCL, Himachal Futuristic, I think they remain a little bit, I think, a promising bet at this point of time. And so is the possibility along with in Starlight Technology. Uh, these are the companies which are thriving largely on the network implementation under 5G. And I think they have suffered in past for a variety of reasons. But I guess I think the right reasons are now working for them. In case of HFCL, I think they are also getting into some of the defense items, I think, which are also basically, I think, going to be producing higher amount of revenue for the company going forward. So in my viewpoint, I think this needs probably demands a refresh attention onto them. They look relatively more promising, and given the kind of recovered results that we see, I think that should probably work for this company and the investors here after it looks like.
Okay, there you have it. That's Deven Choksi's view. Meantime, let's also get in a take then, Pankaj, from you as to what the outlook is on Asian Paints in terms of what exactly you're expecting from the numbers.
So Asian Paints, we are expecting about 10% kind of a 10% kind of a revenue growth that will again be driven by 13% volume growth, and you'll see price decline. There could be a margin expansion, so we are expecting about 19% kind of EBITDA margin, but profit growth would look good on a YY basis. But our challenge is largely has been that while we have seen the input prices sort of correcting, but we would not see a proportionate increase in the margins, largely because of the entry of new players. So that is where we are sort of a lot more cautious. And mind you, it's trade at 55 kind of a multiple on FI25 basis. So that is also not helping the stock much.
Let's find out what the top mid-cap calls are from our chartists, Kunal.
Well, not exactly a mid-cap name, but IndusInd Bank is something which I would be bullish on. The stock heading towards a breakout about that 1175 mark. So my sense is that 1200 levels could be breached in this leg of an uptrend for IndusInd Bank, and 1225 is a target which I have kept for IndusInd Bank over the near term. Stop loss for this trade 1145.
Okay, not exactly a mid-cap name for sure. What about you, Naresh? Is it a hardcore mid-cap, or what is it that you're picking out?
So picking out a mid-cap, it's a buy on Ambuja Cements. The stock has continued on the breakout of 400, maintained the bullish stance. Out here could be looking at a target price of 440 in the short term. Stop loss now revised to 395. Still looks good for a few more days of momentum.
Okay, there you have it. Those are some top recommendations from the fundamental side. Meantime, Kunal, let's get in a take on the charts of Varun Beverages as well as SCI, two mid-cap counters that had a pretty terrific run yesterday.
So Varun Beverages is interesting. That stock, I think, has not even broken below the 200-day moving average in the last 4-5 months of the major price correction. The worst of the correction for the stock was, I think, in the month of December, when the stock corrected from 1500 towards 1200, 1220 mark. But then from there on, it's been a consistent price up move for Varun Beverages. Hardly any major volatility. I think the stock has not corrected even 10% from the previous swing highs in this last 4 months of uptrend from the December lows. So I think that's an interesting chart in the making. My sense is that this up move could probably continue for Varun Beverages because of the way the consistency has been spread over the last 3-4 months. SCI could be something which I would avoid as of now because of that flashy tendency of the stock giving a breakout. It's come after a sideways price action for SCI, so I would not be in a hurry to buy the stock. In fact, my sense is that maybe the stock could probably have gone into an overbought zone and there could be a cool off or a correction post yesterday's up move.
Okay, let's move on. And after the recent MSCI changes, more adjustments are about to be announced today. Besides the revision in the weightage across stocks, there's an expectation, in fact, of $1 billion worth of inflows into India equities. Samit is here to tell us how this is going to impact and affect the flows in these particular stocks. Samit?
Well, the MSCI changes will be announced today post-market, but for India, the numbers or the names of the stocks would come out tomorrow early morning. So the adjustments for the inclusion, exclusion, or the changes in the weightage would happen on May 31st. Now, what brokerages are expecting is an inflow of close to $1.3 billion of which most of this amount would be going towards increase in weightage of Kotak Mahindra Bank. However, let's first start off with the potential additions or exclusions from the index. Hindustan Aeronautics and Max Healthcare have a high chance chances of getting included in the index, and the potential inflows could be in the range of around 180 to 256 million US dollars. Now, Power Finance Cummins India, and Ashok Leyland have a medium to high chance of getting included in the MSCI index, and the inflows could be in the range of around 140 to 154 million US dollars. And on the exclusion side, there's only Indus Towers which has a high chances of getting excluded from the index, and the potential outflow could be close to 83 million US dollars. Now, when it comes to weightage increases, it's Kotak Mahindra Bank which will see an increase in the weightage, which could lead to an inflow of close to 730 million US dollars or 740 million US dollars, which is nearly 9 times its 20-day average volume. And also Indigo, Samvardhana Motherson and Zomato could see an increase in their weightage, and inflows could be in the range of around 19 to 28 million US dollars. And lastly, on the weightage a reduction, there is only Adani Transmission and Adani Total Gas which could see a reduction in their weightages, and the outflows could be in the range of around 80 to 120 million US dollars. So keep an eye out for these stocks.
Okay, let's also tell you what else has been making headlines outside the world of equity markets. And tech giant Microsoft is holding off salary hikes for all its full-time employees this year in order to align with the company's efforts to reduce costs as revenue growth slows down. CEO Satya Nadella said that the performance bonuses for the top executives would be down from compared to the previous year. Also, streaming giant Disney's losses narrowed in the quarter gone by as price increases helped offset loss of as many as 4 million subscribers at Disney Plus, most of which came from India. The company, however, did post revenue and profits in line with street estimates. And also, President Joe Biden will be hosting Prime Minister Narendra Modi for an official state visit to the United States on June 22nd. The visit will also include a state dinner, White House spokesperson said. This visit will offer a valuable opportunity for the two countries to further deepen their comprehensive and forward-looking global strategic partnership.
Meantime, a 5-judge constitution bench led by Chief Justice D. Chandrachud will be pronouncing its verdict on the dispute between the warring factions of the Shiv Sena, one led by the Maharashtra Chief Minister Eknath Shinde and the other by Uddhav Thackeray, on the disqualification plea of 16 MLAs of the Shinde faction last year. As protests and violence meantime continue in Pakistan, the supporters of Imran Khan have reportedly attacked the Lahore residence of the Prime Minister Shehbaz Sharif by setting ablaze vehicles parked outside and throwing petrol bombs outside the house. Meanwhile, the Pakistan Tehreek-e-Insaf senior vice president and close aide of the former PM Fawad Chaudhry has also been arrested outside the Supreme Court. Meantime, in the world of sport, the Chennai Super Kings' incredible gesture at the stadiums. It was an Oscar-winning team from Elephant Whisperers that was felicitated by the team, and 5 lakh rupees was donated towards the elephant conservation effort.
Okay, so those are the top index calls coming for you and the stocks that you need to keep on your radar as well. But Pankaj, other than that, is there any other name that comes to mind with respect to the earnings reaction, something which is a high conviction buy for you guys?
Well, yes. So there are a number of names which I have liked. One of them is KEC International. While margins were softer, our sense is that margins over the next 2 years should improve to 8.5%. Order inflow has been pretty good. So that is one stock which we are liking. The other one is Newgen Software. They delivered a growth of 25% compared to a guidance of about 20-odd%. They're still guiding for a good double-digit kind of a growth for next 2 years. In fact, the medium-term guidance is nearly of a $500 million kind of a revenue from less than 1,000 odd crores. So that is another stock which we have been liking. IDFC First Bank looks good to us. So at 1.3 kind of ROA, our sense is that overall it could be a potential beneficiary of the decline or retiring of the high cost deposits. That could have a delta of about 500 crores on the PBT side. Mahindra CI structurally has been sort of looking good to us. I think so. Margin profile looks good. Margin profile for the parent is even more higher, to 17 to 19 odd %. And it's a forging company which is largely a play on the PV side, so which is why we like this stock. And I already highlighted Mayur Unicorters, so that is another stock which we are liking.
All right, Pankaj, let you go on that note. Thanks so much for taking time out and joining in with your take on the markets. What are the index calls then for our charters this Thursday morning? Let's find out whether it continues to remain a unanimous hold. Yes, indeed it does. That's the advice coming in from our charters. Do remember, it has been touch and go. Yesterday, we saw that late recovery kick in. This morning, it's indications of a pretty tempered start on the pre-open rates. But it's a hold call that continues from our technical guests. Let's find out what the view is on the Nifty Bank, and it looks like majority is tilting towards a hold call here. No trade though from Naresh, and that's the market moodometer reflecting that on the Nifty Bank as well. It's a hold position that's preferable.
Okay, let's just establish the market construct this morning. While it's been a decent handover from the global equity markets, and more importantly, the news flow as well has been supportive and conducive, not just for us, but for the world markets as well, given that the US CPI has cooled off. Now, what this implies is that this really calls for the future trajectory of what the Fed is going to do, and which most market experts believe now will be headed in for a pause, at least at the next meet, and rate cuts starting as soon as July, which is next to next month. So that's really been the drawdown from the US CPI print that one is reading this morning. The SGX Nifty indicating a mildly positive start right now. In fact, it's got 18,400 as a print in sight, at least for the futures. And the market pre-open rates as well not looking all that bad. We made it all the way to that 18,350 level, which should not be a bad indicator by any means. The headline number continues to look impressive. Lot of number crunching, lot of earnings. Remember, this is the last big week of Nifty earnings that the market has been adjusting. So, got a lot of these earnings come by. If we can just bring up the earnings roundup on what we're calling good, inline and bad numbers, because that immediately on opening bell is what the markets would be reacting to. That graph will just come up for you on your screens. Some key earnings as well, which are lined up today. There you go. Good numbers from Precall, Novelis, Cottage Consumer, inline for Energy Infra, and then weak from L&T and Dr. Reddy's. And I think it's the weak segment, unfortunately, which the market would first react to, especially L&T. In terms of important earnings today, it would be Balrampur Chini, it would be Eicher, and then Asian Paints. The commentary from these three is going to be utmost critical that the market is going to be looking out for. And then, of course, while in the last 4 months, we've seen how the FII pattern has been, especially this month or month to date, the FIIs and FPI activity clearly has come back. They've been buying India equities, so that support continues, was no different yesterday as well. In fact, month to date, we've seen FII buying of almost 11,426 crores, which has come in. And year to date, it's still pretty much a negative. So, but yeah, the monthly data has been holding out very, very well. In terms of key levels for the market right now, we're looking out for 18,450, 18,500 as being the next resistant level. The Nifty continues to take support at the 18,200, 18,100 odd mark. For the Bank Nifty as well, which also has been powering ahead. Of course, it's a different constituent set each time, which scales up the Nifty Bank higher. But we are looking at support zone of 43,200 to about 43,000 on the Nifty Bank as well. So that's it then, getting up and setting up for the day. It seems like it's once again going to be a quiet start, but maybe we pick it up from there, while the SGX Nifty is indicating a mildly positive start, and so is the Nifty pre-open rate. Lots of earnings which first are going to be on our radar. Like I said, it's going to be about L&T and Dr. Reddy's first up, because L&T's numbers were a bit of a minor miss, and the order inflows, though, they remain strong at 76,000 odd crore rupees. They come the first bell then this Thursday morning, the opening bell that is, and we've started off with a print of around 18,340, pretty much par for the course and along expected lines. The breadth of the market, even though it's early days, but we've started off quite okay there. L&T, let's bring up that stock up for you, because given the market positioning around the entire manufacturing and the capex theme, and more importantly how L&T as a stock has performed, you are seeing a sharpish reaction come in on L&T. Although the numbers are not all that bad, yes, it is a miss, but maybe market was also anticipating a little bit of heightened expectations. 3% lower for L&T. This is definitely also going to have a bearing on how the index moves out, because remember, this is a heavyweight regardless. DRL2, the US sales have been slower than estimates. The profit and revenue also has fallen somewhat short of expectations, 3.6% lower for DRL2 as we speak. So these two clearly go down as the rank disappointments and misses when it comes to the earnings. Now let's talk about what's actually held out. Novelis came out with an inline set of numbers. That's definitely going to have a bit of a rub off on Hindalco. Novelis's Q4 net debt also has declined. But again, Hindalco also is not seeing any positive reaction. In fact, the stock is sharply lower by 2.6% as we speak. Gujarat Gas, the Q4 numbers are above estimates, so look out for that stock. Godrej Consumer has been a beat. The Q4 numbers are in line. Margins have actually seen an expansion of about 400 basis points. GCPL holds out by about 1.6%. SRF, Bosch, Precall, Novartis, these are all earnings reactions that we will see. And Edgy Infra also. This has actually been a bit of a dhamaka earning, if you will. The EBITDA has jumped up 54.5%, and the margins also have expanded more than 100 basis points. Edgy Infra gaps up by about 4.5% as we speak, and then result disappointments from a PNG as well as Sagar Cement. What about the buzzers from yesterday? Madison of late has been in good stead. IndusInd Bank has been holding out well, so let's check in on those names as well before we move forward. IndusInd Bank still flat, and flat for the index.
Oh, well, yes, other than that, let's just track what Adani Enterprises is doing. That fundraise is expected to have a bit of a positive, move on the stock. Is that working out? Yes, a 2% gain there. And for Zomato as well, when we understand from sources that the discounting is going to be capped, is another candidate which is holding up in the green. Sanofi saw a bit of a reaction yesterday as well on account of earnings, as well as that demerger news continues to trend higher. Almost a 2% gain coming in there. But apart from that, it continues to be more of the same. There are not big movers today to start off the trading session, apart from Ratnamani Metals, which has seen a great reaction to its earnings, and IT has actually managed to hold up in the green. IT, in fact, is the best performing sector for now. LTTS, LTI Mindtree, these are your big gainers, and Dr. Reddy seems to be dragging the entire pharma index lower, so a cut of almost 0.8% there. Well, let's get the first trades going with our technical experts. Kunal, what are you spotting as far as the index trade and stock-specific recommendations concerned?
So again, a decent opening for the indices. We're back at the 18,300 mark. What matters in the next 1 hour is that whether we hold on to that level or not, because that would lead to a good amount of short covering in terms of the 18,000 call option strikes. Now, the stock which I would look to trade in the open would be on AB Capital. Very attractive chart. The stock corrected yesterday to 167 approximately. So I think it looks attractive from a risk-reward play as well, AB Capital.
Okay, critical to monitor the index as well as, we are holding out quite comfortably above the 18,320 mark. So, Naresh, a quick word on the index and your first trade?
So, it's interesting to note that the index is flat, but the mid-cap and the small-cap indices have opened up a good 0.5% almost. So, the broader market strength and the advanced decline ratio looks good. So, positive for the day. Looking at IndusInd Bank, that means a stock which looks like a leadership stock along with Axis Bank. So, like IndusInd Bank for the short term.
Okay,